Senator McDonald.
Thank you, Chair.
Sorry to get you mid-sip.
Mid-Tim Tam, thank you. Good evening to APRA officials. At the Senate estimates hearing on the 28th of October 2021, I asked a question about how new business volumes for the retail advised life insurance channel had declined by 50% over the last 5 years as a result of less financial advisors, less commissions and a reduction in those advisors who are providing advice on life insurance products. I also made the point that new business is very important for life insurance as it serves to add younger lives to the life insurance pool and it covers some of the fixed costs of these companies. I asked whether such a significant decline in new business was very concerning for APRA. I asked since the APRA reforms to the individual disability income insurance market from 1st of October 2021 that new business volumes have declined even further. The answer I received last October seemed to suggest that the problem was attributable to recent premium increases as a result of losses experienced by life insurers. These losses have largely been limited to the individual disability income insurance product. So why has this driven such a large reduction in new business across the board? Can you please confirm if this decline in new business is as of material concern to APRA and further explain what has been driving this decline in new business and what are the consequences for the life insurance market?
Good evening. It's Helen Rowell, Deputy Chair of APRA. I'll respond to that question. I think the drivers of new business volumes in life insurance are quite complex and they are significantly linked to the level of premiums that are charged, but also the priority that individuals place on life insurance in the context of their overall circumstances. There have been a number of changes to the life insurance market and disability products, in particular retail disability products, over the last little while. Those new products are very different to the previous products that were in place. They have more sustainable pricing terms and conditions, but getting behaviours and response to those new products to change, particularly in the current environment, which is quite uncertain for many people, I think is proving challenging. So there has been a dip in new business volumes. I don't have the precise numbers in front of me. We can take that on notice. Our understanding from the insurers is that they are getting a reasonable response to their new products, but it is taking time to explain the changes and to both the advisors and to the policyholders to get the take-up.
All right, so you will take on notice that the decline figure, I've quoted 50% over the last 5 years, but if you could take that on notice, I'd appreciate it. At the Senate estimates hearings on the same date, 28th of October 2021, I asked a question about a response from APRA to a question on notice from Senator Small in June 21, in which APRA justified life insurers giving large discounts to new clients on the basis that having them underwritten again reduces the risk they pose. Now, I asked the question, given that some insurers are offering a 25% discount in year one, supposedly as a result of the underwriting process, which the insurer needs to pay for, how can this be a good thing for the other policyholders in the insurance pool? I'm sorry, that's the question.
Yes, I don't think I can add anything more to the previous response we gave on this. The way insurers manage the pricing of their portfolio across new and existing customers is a commercial decision for the insurers. There are a number of reasons for them pricing the way they do. It's important to be sure when you're quoting those figures that you're comparing like with like. Often the new policies that are being sold to the new policyholders will be different and have different terms and features to the existing policies. And so I think some more granular analysis would be needed to understand exactly what the discounts or the differential in pricing between new and existing customers was and whether it was a like-for-like comparison.
Okay, so you...
Beyond that, I don't have anything to add beyond what we said at the previous hearing.
So you don't think these discounts are a further indicator of a life insurance market that is in difficulty. I'm wondering if you would have concerns.
Excuse me, could I just say, I think we are concerned about the life insurance. I think we are concerned about the products, the pricing, the sustainability and the cost of insurance. And that's why we are pushing the insurance industry to respond and to make changes to all of those aspects of what they're offering so that we get a good outcome for policyholders so that they can get valuable cover at a reasonable price, and that the insurers can write sustainable business. So it is a concern, and that's why we've taken action in the disability income space.
So the pricing practices of the funds, of the offerings, are you taking any interest in that, tracking that, and reviewing what the impact of the changes would be?
We are monitoring the response of the life insurers, but in particular to our disability income product expectations. We're looking at a range of things, including what's happening to pricing, but also what's happening in terms of the terms and conditions, the changes they're making to their underwriting and claims processes and the like. It's an ongoing process. It's early days. These new products were only put in the market from October last year. And so that will be an ongoing process for us to monitor over the next, 12 to 24 months.
So you'll be having a review, a fixed kind of review period at 12 to 24 months? Is that your intention?
Yes. So we have communicated to the insurers our expectation of what we want them to do over the next little while. We have got regular updates from insurers to give us information on what they're doing and the changes they're making to their whole process around disability income insurance. And we are getting regular information on premium changes as well so that we can monitor what's happening in the market.
Would you publish a review decision? How do you go about... How does APRA go about that process?
So there are two different ways in which we would deal with those reviews. There's the specific feedback to individual insurers, which we would not make public, but we would often publish some sort of summary report of general themes and findings of what we're seeing, whether by way of a letter to industry or in some sort of insight article or other published report. It really depends on the nature of what we find and the level of concern we have, I guess, as to the depth of and nature of what we would publish or the form of what we would publish.
Right, okay. Well, I guess some of the questions that I'm asking are hopefully flagging the concerns that industry's brought to me. So in response to questions that I asked at the previous Senate estimates, APRA released data on the extent of premium increases for the individual disability income insurance market, suggesting that the average increase in 2020 was 15%, which is before any age-based increase. I'm keen to know what the average increase was for 2021.
I don't have that information to hand, and so I will take that on notice and see what we're able to provide.
Okay, thank you very much. I'd also like to know the maximum average increase by any one insurer, the extent of increases for level premium businesses, the average increase for closed products such as agreed value policies that have in the past been so important to small business operators. I'm hearing that some of these increases since APRA intervened in the IDII market have been as much as 70%. An average of 15% can hide what is really going on and the impact that this might be having on everyday Australians. Whilst you may have commenced your intervention into the IDII market with a primary focus upon the sustainability of these life insurers, what are you doing to ensure that these life companies are being fair to their existing policyholders who are now in closed products?
So we are expecting that the life insurers develop a plan to transition their existing policyholders from the existing products to the new products or to new products, and we expect them to do that in a fair and equitable way. I think it's important to understand that is a challenging process and not entirely within the insurer's hands, because those policyholders have a choice of keeping the existing policy with all the terms and conditions that go with that, but also a significant increase in premium to deal with the losses that have been incurred for those products in the past, which is what the insurers are responding to. The alternate decision that they can make is to move to a newer product, but that perhaps has different terms and conditions that are slightly less generous, but is more stably priced and more sustainable going forward. And that's a decision. How the life insurers balance those decisions, and the information that they give to policyholders is clearly important, but ultimately that's a decision between an arrangement between the life insurer and the policyholder. We monitor, engage and review how that's being managed, but it's not something that we can necessarily directly control. It's a decision for the insurers and the policyholders.
Isn't it a challenge for the policyholders that they get to a point where they're not insurable under another fund? There's some reflecting on personal experience where I'm now apparently too old and too risky to insure, so I'm going to stick with my wildly expensive, fund that I have. Better something than nothing.
Well, I think, again, that's a challenge for the industry, and there is a process called underwriting to assess risks. We expect insurers to do that in a fair and transparent way. There are a range of insurers out there who have different terms and different approaches to underwriting, and I would not like to think that just because you're getting older, you're uninsurable. There would be insurers out there willing to write reasonable risks, whatever age of the policyholder.
Well, that's a hopeful note to finish on, Chair. Maybe I am insurable after all.
Oh, absolutely. I think you're insurable. And I think your
Chair.
deductible would be very, very low indeed.
Let's